Do you have your brokerage account open and logged in?
No.
All right, I'm going to pitch you some stocks. You might want to buy a couple of them.
Oh, I'm gonna talk to my wife, Josh.
No, I'm not pitching you, but I just want to get your take on these. Sean and I keep a list of the best stocks in the market. You know what we're looking for. The general idea is we buy strength. We're not looking for reversals and pieces of shit. We're not bottom fishing.
Is that on the fact sheet?
Yeah, we're not storytelling. We're not listening to conference calls. It's not that we don't care. It's that's not the selection criteria.
Okay.
So might have a personal interest in learning why a stock is going up, but it doesn't start there. Okay. I want to show you a couple and just hear what you think. It doesn't really matter what I think of the technicals themselves. Morgan Stanley's been on best stocks in the market list, I think, consistently since the summer. It's probably been a good 7-8 months.
Man.
And it is just the move today is obviously earnings driven. So let's assume a little bit of today's move fades. This is as good of an uptrend as I've seen in this stock since I started doing this 30 years ago.
I feel like you normally don't see stocks like consistently that long of a period of time sitting above the 50-day.
Look how well behaved. Look how well behaved this is. And it's not that there haven't been like rough weeks, but like this stock has given no one any reason to sell it whatsoever if they're just focused on price. What are your thoughts?
I mean, financials in general have been a monster, right? European financials, Japanese financials,
U.S. money center banks,
all of them just absolutely ripping. So it's more about the group that it's in and less about the stock itself. You know?
I agree. These don't really separate that much from each other. Large cap U.S. financials, they tend to do what they're all doing. I agree with that for the most part.
Yeah, I mean, you know,
this one's not your favorite.
It's not that it's not my favorite. It's that they're all kind of like this, right? Where like they're extended. You know, look at Bank of New York Mellon, absolutely ripping. Look at all these European banks. I mean, the trend is up. And for me, it's less about trading Morgan Stanley and more about thinking about the implications. You know, if these financials are up, not just in the United States, but globally, like I'm old school. Like I came up in the 2000s. I was there for the great financial crisis. We don't have bull markets in America without financials. And in the rest of the world, it's even more egregious when you look at the holdings of the companies in those indexes. So like
I look at an MSJC and I just in my mind, well, how do they make money? They have everything in their favor.
Mm-hmm.
There are IPOs, there's M&A. The FTC isn't saying no to anything unless Trump wants to get something for himself out of it. So there's deals all over the place. You could bring companies public. Asset management revenues are ripping because asset prices are at record highs. They make money as a treasury bond dealer. I think they're in that business. Net interest margin, spread businesses, like proprietary trading, fixed income commodities, currencies. There's nothing they don't make money from. There's nothing that they're involved in that's not doing well right now. And
I would say
189
is a big number there.
Okay.
Big, lot of market memory there going back. You know,
put up John GS.
To the great financial crisis highs. So if we start falling back below 189 and kind of holding below there, that could start to turn into a problem. But if you're above 189, I mean, this another 50% higher, why not?
Basically the same chart, Goldman Sachs.
Yeah.
Morgan Stanley's been an easier ride. You've had some trend line violations here along the way. I just think that's the nature of it being a higher baited name than Morgan Stanley, at least these days. But like huge winner.
Yeah. Same trade.
Okay, I'm with you. All right, I grouped these together.
Yeah, the trends are not down.
Here's a question. Next chart. You can't buy this with a straight face, right?
Why?
I don't know. I can't. This KLA. This has been on the best stocks in the market list for a while. We wrote it up a few months back. It's been like a massive home run. This is parabolic to me. What do you think? You can't buy this stock.
No, I cannot.
No way. Does the presence of a gap like that bother you?
No.
That's a baby gap.
Would it stop you from that? That would not be the thing that would stop you from pushing buy on a KLA.
No, I'm looking at like 15 and a quarter. If we're above 15 and a quarter, I think you're fine. You know, that gap is just evidence of, relentless buying pressure. People are like, oh, JC, it's overbought. It's like, well, how can an overwhelming amount of buying pressure possibly be a bad thing? I don't know. I don't understand.
Well, this is reacting to Taiwan semis news today. That's why it gapped today.
It can be a bad thing in the very short term. but who cares?
Semiconductors are making all-time highs on a relative basis. So the fact that you're putting up a semiconductor stock that's making a new high, like it better be.
Yeah. No, I agree with that. Next one.
What are you doing?
Here's another one. We've been writing about this one all year. Lam Research, LRCX. Not as parabolic as KLA, but basically the same chart.
Yeah, I mean, like, what do you want me to tell you? I mean, it's a bull market.
The question is, can you hit buy on a new trade in this stock today? Or you would not do that?
I mean, I wouldn't today because that's not how I trade. It doesn't mean that it can't go higher. Like 236 is a big one here. You know, this goes back to the dot-com bubble highs. 236 is a big one. So if you could
you're looking at 25-year charts right now? Yeah, all of these stocks were like also part of the original dot-com bubble.
Me and Leonardo Fibonacci de Pisa are getting down right now on this laptop. You know what I'm saying?
Okay.
You know, 236 is the big one. 381 is next. So if it could stick that 236, yeah, it could keep going higher. But, you know, expect volatility. I mean, this thing's going to be down 10% in 2 days.
For no reason.
For no reason.
It's just going to
happen.
In
a week. Easy. You
and
know?
it'll shake out the type of people who bought today without even thinking about it.
That's right.
All right, next group. Here's CBRE. In 45 minutes, I'm going to go pitch this with Sean at the New York Stock Exchange. I'm not going to tell you the fundamental story. It's commercial real estate, which everyone obviously hates and thinks is a worthless asset class. And this stock doesn't give a shit what anyone thinks. And I love these types of setups where they're consolidating below resistance for a while and knocking on the door.
Me too.
And it just, to me, this is so obviously going to break through. It is the blue chip of the space. It's an asset-light business in commercial real estate, which is an asset-heavy sector. Yeah. And they're going to treat it like a tech stock because they've transformed the whole business from brokerage transactional commissions to an ARR model.
Can I tell you something?
And the street loves these stories.
I'm buying this stock today. How about that? You just convinced me. I love this chart.
Yeah. Like it?
I like it. 185 is coming.
I'm buying this right now.
All right.
185, and then after that,
and I'm not front running the CNBC Pro people because I wrote it up this morning in the column.
260 after 185.
All right, I don't own it yet. I might pull the trigger too. First Solar. I don't know what to do with this. This stock's been on the best stocks in the market list. It still is.
These stocks are so
These
volatile.
are so hard for me. Yeah, these are so hard to figure out where to enter, where to exit. But think about it. While we're on the subject of 25-year charts,
no solar stocks ever.
Like no solar stocks ever.
No.
Because you lost money in Enphase?
No, but
that wasn't good though.
No, dude, bro, this chart,
bro.
Dude,
if you're gonna do solar, you gotta do Chinese solar.
JC,
you're either gonna go full junky
or TAN, the ETF.
Fine. You ever make money? You ever make money? JC, you ever make money in solar stocks?
Yes. And I've lost money too. I mean, I've traded everything over the years, but check out Array.
What is the technical read? Somebody shows you this chart on a trading desk. What's your answer to them? There's nothing here.
It's a mess.
It's a mess, right?
Yeah, it's messy. I like Array better.
So I can't bring myself to write this one because it just looks weird. All right, I have one more pair.
Wait, hang on. What does CBRE do before I buy it? I don't care.
Great. One more pair of stocks, oil services. This is Baker Hughes. I love this break. I love this breakout.
I want to buy this too.
Look at the long term on Baker Hughes. Yep. This seems like pretty momentous above 50. Can't this go to $100?
I mean, are they still counting rigs?
Do you forget about all that? Do you know that
that's a thing that they do?
Crude hasn't even rallied yet, and this stock is breaking out. When crude goes, this stock really goes, and that hasn't even happened
Baker
yet.
Hughes and not like Halliburton?
Well, that's my next chart. So
Halle Berry.
here's Halliburton. Halliburton's already gone.
And the Slumburger.
That's also on my list.
Like,
they
go to this restaurant and order the Slumburger. No pickles.
Do you like this bet? You like this Halliburton better than Baker Hughes?
I mean, I think I like energy. I'm long energy. I'm getting more long energy. You know, oil services. You know, pick which one you like. They're probably going to move together. Higher beta is going to move more. Yeah. You know, if you want to get junky, go offshore driller or something like that. But like, you know, if you want to get an energy, you can get an energy. And there's a few ways to get the juice. You can either go down the cap scale and buy some junkier stuff, or you can be in the derivatives market with the bigger names. You know, I think either way.
I think the services names could all rip this year with a tiny bit of help from crude.
Nobody owns them.
But you need a much bigger move in crude in order for like the oil producers to make that kind of move. I think the services can just go because they're going to go.
And the refiners have been going, but
and they already broke.
Americans Americans don't own it. And I think that there's a squeeze to be had there, right?